Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Thursday, April 16th. The year's 2020. Let's talk trading. Pain! Is trading painful for you? And I've got Walmal on the line again.
Good morning or good afternoon, depending on where and when you're listening to this. But hope you all are having a great day.
Yes. Anyway, yesterday Walmal and we each watched this guy had a video, and he was talking about pleasure and pain in trading. And in yesterday's video, the stick to it, we talked about sticking to your plan. But, if you're experiencing pain, in this case, it would probably be mental anguish. Sometimes it's really hard to stick to your plan. But just remember, fellow traders, these videos are for educational purposes only. Your results may differ from mine, may differ from Walmal's, and trading's extremely risky. You can lose all of your money. If you need trading, investment, or financial advice, seek the advice of an accredited financial professional. Okay, and when you're trading, always have your stop loss in place. Always never ever lose more on one particular trade than you're willing to lose. In other words, do not exceed your risk level. Okay, we can see for the week, the euro is down. For the day, week, month, and year, the euro is down. And we actually broke out of the opening range here for the week and the opening range for the month. There was a couple of triggers there right near the daily open. I hope some traders got that. And you can see we're in the daily inside bar area. So you got a long trigger at 109.01 and a short at 108.29. So for you inside bar, horizontal line traders. On the range, we just had news, but market really didn't react. You can see we only have 5 pairs over 100 in range. Here, once again, pivot point opened above the open, but we had a long bias, but it was barely above the buy zone. But if you went short based on other triggers, there was profit to be had. Red rats are feasting at the moment. You can see here the euro is coming down. And this is off of the original rat zone, not the smart rat zone. And once again, we missed that pivot on the daily. Here we see we missed the pivot on the daily. But as I told you earlier, we got that pivot on the weekly earlier in the week. I said look for that weekly pivot to be taken out. We're in the wick zone. And as you can see in the Walmal method, Walmal and I each, we took that break at 90. I think we got about 4 or 5 pips, right?
Yep, that's what I got about. I think I got 5 pips on it. I'm not sure what you got.
Yeah, I got 4. But, back to the main idea about the pain. The guy in the video was talking about when you're down, that's when you feel pain, and when you're up, that's when you feel elated or pleasure. But Walmal has a different take on it.
My fear is that I'm going to not get the money that's on the table. So he was alluding to the idea that while you're up, you're elated, you're having lots of pleasure, and it's great, and it's easy to stay in the trade. Actually, for me, that's not really true. For me, it's sort of like that's when my pain actually starts to kick in, because it's sort of like the fear that goes and steps in that, okay, I've got paper money right now. How do I protect that? So I need to be more conscious of that. Whereas other folks, he may be right. And I think that's the most important thing there, is because, when we look at pain and you have to figure out what causes your pain, and then learn how to control that pain.
Well, yeah, and it's funny because for me, I guess the pain is when the price goes against me. On the one hand, it's like if you entered, like right now, had I entered long at 90, I'd be feeling some pain. It'd be like, dang it, right there. You can see right here on the chart. It came up, even though it did the bid didn't touch 90. The ask probably touched 90, and so it would have triggered long if I had been trading right there, just following the method. And it's like, whoa. Then again, if you look at price action, you see it got rejected here twice, and you see it's making lower lows. Then it came back here, gave you an opportunity. Maybe you grabbed the, let's see, what did you get to grab there? Maybe you got 2 pips if you were quick enough, and then you see how it reversed. So, go ahead.
And I think a really good thing about that, for me anyway, that doesn't really cause me that much pain. And part of it is because I know that my exit strategy is pretty strong in terms of stopping my losses. And I know statistically over time that will protect me. So that doesn't cause me too much pain. My pain comes from, okay, not getting my profits off the table in time before it goes against me.
Yeah.
So every person is different. And like I said earlier, you have to go and figure that out about yourself. And I think a very, very important part of that is, a lot of folks say, well, you learn to trade by trading on a demo account. Well, let me tell you something. You can't feel pain trading on a demo account because it don't matter. It's like playing it. I don't know how many folks out there play ball in any way, but when you play a scrimmage, it just doesn't matter. But when you play a real game, then it matters. And then all of a sudden, when things go against you, you feel that pain.
Yeah, definitely. And, the other part of the pain I feel is when we were doing this trade, because you see here, it kept bumping right here. And I told Walmal, I said, you know what? This sucker's going to the 10900. I said, and so we both jumped in the trade. It came up here, and he was a little bit quicker than me. He got 5, I got 4, and then it ran to the 00. That's the pain I feel, is when I call this stuff out. So the question is, actually, it's not a question, but I think that goes with what Walmal was just saying. We're up 4 or 5 pips. I mean, a lot of times when we take these trades, we just want to get a couple of pips at, chip away. You could tell that story, unless you already did. And we just want to, stack some bills, in our wallet. But I don't know if you told the story about chipping away yesterday or not. Well, go ahead and tell it again. Tell it again. It's a good one.
Yeah. Well, the idea was that, well, not the idea, but what had happened was I lost 7 trades in a row. I was down big time, but I had 2 choices. 1, pack it up and go home, or 2, what I could do is just come back, reset. And I call that a reset. Sit there, look at what you did, find out why you did it. Are you losing just because the market's just going against you, or are you losing because you're not following your rules? Well, for me, in that particular case of 7 losses in a row, what I found was that the market did go against me in the beginning, and then what I tried to do is I tried to change my trading plan on the fly. Guess what? I need to chip away, and the way you chip away is you go and do a reset, get back to your rules, get back to what you're supposed to be doing, and when you get back to doing that, you just chip away. So all of a sudden, I'm no longer down 7 trades. I'm now down 6, then 5, then 4. The next thing you know, I'm up. And I'm not up big time. I'm up by just a few pips, 1 or 2 pips, I think I was by the time I was completed. And at that point, I said, you know what? I chipped myself out of a mess. It's not time to go and chip myself back into a mess. I'm done. I'm happy with having only 1 or 2 pips for that day. That's a profitable day. And you're going to have days like that where you just at the end of the day, you're only up a pip. And then other days, you're up a lot. Yesterday, I was up, a bunch. I don't remember exactly, but I was up a bunch. But on the other hand, on Monday, I believe it was, if I recall correctly, I was only up at the end of the day maybe 3, 4, maybe 5 pips. You just have to, that's trading, and things average out. But keep your eye on that P&L, keep your eye on what you're doing, and just chip away when you get into that. And what's really neat is that when I was in that mess, being down so many trades, okay, when I kept on chipping away, all of a sudden my confidence started building. I had a more positive outlook because what I saw was that negative number becoming less and less and less until finally we went over to the other side, the good side.
Well, I wanted you to tell a story about the golfer. And that's because that's where you got the analogy.
Yeah, well, there's a golfer. His name was Payne Stewart, and now Payne Stewart, a lot of people know he was a Masters winner and a great golfer. And I just remember, watching him play one time. I was in high school at the time, and he came up on the green behind me. He played from actually a different state than I played, and he went, and I'm on the green, and we're on a par 4, and he went and off the tee, hit the ball 20 yards over my head. I mean, just completely annihilated it. I had to go and talk to this guy afterwards, and because you just knew he was going to pros. And one of the things that his coach said to the two of us was, you know what, you can hit the ball a long way, but the guys who win are the ones who keep on chipping, the ones who keep on going at it and just kicking it up a little bit. All you need to do to win in golf is just be better than the average. Yeah, it's great to have that long shot, but if you can't get it in the hole, it doesn't do you any good. You got to be able to chip it in.
Yeah. Now, back on this trading, there's something I want to show you traders here about the Walmal method, and you can probably apply this to any method. Okay, right now we, between the 80 and the 90, that's 10 pips. And then as we took that trade, it ran all the way up, and you can see here the current range is 20 pips. So when you come back down here, it's already ranged out. It's pretty much, you can see here, the one before was 16. We had a couple of 30s and a 21. So you can pretty much say, you know what? This sucker's already ranged out. It's come back here. Now, for it to push that range, it either has to break here or it has to break down through here. Or actually, at the time, it had to come back below the open. And so there was like really no reason to take this trade right here or even here. It's already ranged, so you're not getting that initial momentum behind you. Now, of course, this chart could have looked different. This could have come all the way up and beyond. I mean, this could have spiked to say 109.10, but to me, the way I analyze it is I'm going against the statistics, and that's why I'm saying, hey, out of the last 4 bars, look at this. You've got 3 over 20 and 1 below 20, and I'm right at 20. So, and for this to get here, that's another 10 pips. I'm going to need another 10 pip spike. And what made this happen? This was right before the news, right? That it spiked up, if I remember correctly.
That is correct.
Yeah. So we were kind of, we'd already pushed our luck, and here we go again, right here live, another opportunity. But I'm sitting on my hands because I'm making the video. I'm not trading and making the video at the same time. So, and as you can see here, it pulled back down. I'll wait for the next hour, and then maybe, we'll get some other push, or actually, usually about in the last 15 minutes, the last 5 minutes, sometimes some trading programs kick in, or traders, or just want to scratch their trades or whatever, and you might get some more movement. But chances are, will this number increase? I don't know, but I've already put the pips, in the bank, in, my bank. So I'm not going to push it. I'll just wait for the next hour. What do you think, Walmal?
Yeah, and I agree. And that's the great thing about it. Every hour you get a new opportunity. If a new train comes into the station all the time, why put yourself into a position? Yeah, you could make some more money there, but at the same time, you're pushing against the statistics. Why not just go and put the money in the bank and sit on your hands and wait for the next best opportunity to come along? And that's where I think a lot of traders get into trouble, is because, and I know that's what one of my biggest problems is. It's like, my eyes lit up. Oh, another opportunity. Got to take it. No, you really don't have to take it. Wait for the best opportunities to come along. And that means waiting for the statistics to be on your side. And like you said, today you look at 16, 33, 31, 21. Those are your ranges. Right now at best, looking at the best range, we're 2/3 of the way through it already. It's not worth going and trying to challenge that. It's too risky. At least for me, anyway, it's too risky. I'd rather just sit on my hands. And like I said already,